Welcome to the Clear Diagnostics Tax CPA Success Show, where we share updates on current tax law, operational stories from the tax practice of our virtual CFO firm, and anything else tax-related that comes from being a leading distributed virtual CFO firm. If you're a CPA in tax practice who wants to learn strategies to minimize taxes for your clients, then this podcast is for you.
All right, welcome. This is a podcast that we are just getting started, and we're really glad that people are here listening. Dave, I'll introduce you, but we're calling this the Clear Diagnostics Podcast. Do you want to talk just first why we came up with that name?
Yeah, of course. It's because every other tax-named podcast was already taken. Tax super savers, things of that nature. No, diagnostics are things that really prevent you from finishing a tax return. And so once you clear your diagnostics in your tax software, it's a very exciting moment for people in the tax professional, in the tax profession. So if we have tax professionals listening and watching, they will totally get it, and they'll recognize that, yeah, this guy gets it for sure. So that's why we call it the Clear Diagnostics Podcast.
Okay. Do you want to tell us a little bit more about you? People listening who are saying, why should I listen to this guy, right?
Yeah, that's it. Yeah, they're going to be questioning that very quickly. No, my name is Dave Danic. I'm the Director of Tax Services at Summit CPA Group. We are a virtual CFO firm and really proud of it and what we can do for our clients. So we do tax work for a lot of our CFO clients. Tom, you're a CFO. You know, that's our bread and butter of what we do at Summit CPA Group. But along the way, of course, they're business owners, so they want to talk taxes too. So that's why we exist in this tax department. So
excellent. Yep. And as you said, I am a CFO, so my title is virtual CFO. And in that role, I have multiple clients where I play the CFO for these clients. And like you said, Dave, taxes come up both from a business perspective, and then also usually many of these are single owner or just a couple of owners. And so then their personal taxes come in. And the topic we'll talk about today comes up a lot, but I often get questions where you've taught me that I can answer a portion of them, and many of them I say, hey, let me get with Dave and I'll come back and give you the answer to that. But it is a fairly frequent thing that comes up. So you want to tell us a little bit about what we're talking about today?
Yeah, sure. There's so many things we can talk about. There's going to be a new tax law coming up, but that's stalled in Congress for the time being. But it's 9/11 right now as Eastern Standard Time as we're recording this. And this is when I usually start thinking about lunch. So, okay, let's talk about eating in meals and entertainment deductions. I don't know about you, Tom, but I'm guessing you get a lot of questions from your clients saying, can I deduct this? Or, hey, I'm going out to this meal, or can I deduct this? Let me put this through.
Totally.
Or we have our bookkeepers on staff or our senior accountants, and we ask them to, when we're getting ready for the tax return, and we always say, look at a couple of these accounts to see if these are deductible or not. And then you go to the meals, and it looks like they have some of our clients, Chipotle, McDonald's, and like every day they're writing off their meals. And we're like, okay, might be getting a little aggressive on what we can write off when you write off your breakfast, lunch, and dinner and your snacks every day.
Every single day, yep.
So there's always some level of education that we have to do with our clients when it comes to the meals and entertainment deduction. And things have changed since COVID-19. So there's certainly some opportunities for education and also some tax savings for our clients as we go through that.
Yeah. And remember when they say the tax changes came through, they make headlines, but you get like 6 words. So that would prompt the owners to then come to us and say, does it mean, nothing is deductible anymore? Or what does this mean for me? And then you start getting all the examples. Like you just said, what if I this and that? And they become like lawyers. What if I twist it just a little bit? And so they force us to really understand the rules to guide them.
Yeah, absolutely. Yeah. So that first change that came about was at the end of last year. when President Trump put through an executive order, I think it was, saying you can do 100% meals deduction if it is purchased from a restaurant. So it used to be all meals were 50%, whether you bought it at a restaurant, whether you bought it from a convenience store, if it was food or if it was snacks or something like that. But the intent was, hey, all these restaurants have been closed due to the pandemic. How can we help them? So the thought was, let's make business meals 100% deductible if they are purchased from a restaurant. So anything on tax law, you have to go to the language and you have to parcel out pretty much every single word to find out what a definition of what that is. So the first thing I will always talk about with our clients is, well, it's a business meal. So what's a business meal? Well, a business meal is one that you have, where I would say the intent is for the generation of revenue or education for your team, where, you know, the primary purpose is business related. Now, obviously, people can small talk before and after and things of that nature, but it's business related. So who should you have there? A client, an employee, a supplier, and then you also have to document about what was discussed at this meal. And it's usually not very difficult to do that. I mean, a lot of times you can take a picture of the receipt, and, you know, if you've got like a receipt tracker, you can pretty easily write down and type your notes in the purpose of the meal.
Yep.
So I think that was
like
a pretty
Expensify, right, as a software really easily that you could put in. I assume even like a sentence to describe it is probably enough. Is that right?
A sentence, geez, your grammar is probably better than mine, but usually it's more of just notes of saying, Tom, Dave, tax law update, things of that nature. So yes, so that's the first word you have to cover in that, and then the next word is restaurant. So how do you define what a restaurant is? And I'm going to read and just really quickly, just to give you like how these things sound. But it's a business that prepares and sells food or beverages to retail customers for immediate consumption, regardless of whether the food or beverages are consumed on the business premises. So I think there's a couple items in here that are really important as we go through this. One, it's a business that prepares and sells food. So prepares kind of tells me that there's a kitchen involved, or it's not pre-packaged food. So like that, so that's excluding the grocery store, the convenience store, the CVS, things of that nature, because they're not preparing and selling there. The other word that I see is retail customers. So when I think of retail, I think that's being able, you and I coming off the street to be able to get that food. You know, I think they say they put retail in there I'm a little careful of like the whole catered food type of food event. So be careful there. Immediate consumption. So once again, getting away from that pre-packaged, being able to get the food now, eat it now, or even carry it out. And this is the other important one, is whether or not consumed on the business premises. So you can eat it there, or I can carry it out, or I can have it delivered. So that's another big thing. So if I do DoorDash or other type of food delivery purpose, if they deliver it to me, and if it's from the restaurant, that still counts for that 100%.
Okay. So
deduction.
For pandemic, when takeout and carry out delivery really got big, that still fits within the definition of restaurant.
That's correct. Yeah, that's right.
Okay, good.
Yeah. Yep. So, so a couple examples just to kind of go through on like what would we do? So if you're traveling on business and you go out to a restaurant, hey, yes, business meal, you can 100% deduction. if I'm traveling on business, but I take some food from like a convenience store and bring it back to my hotel room, can I deduct that? Not 100% because it wasn't the restaurant, but I do get the 50% because it was still a business meal because I was traveling for business, but it just wasn't purchased from a restaurant. I don't, let's see, going to the restaurant is good, of course. No gas stations, no convenience stores. If you're traveling, you want to pick up a bag of Skittles, does not count.
The refrigerator in the hotel that sells you the $9 soft drink. Sounds like that's 50%.
It would be a 50%. Absolutely. Okay. Yeah. So very convenient, but very expensive and not fully deductible.
Yes. Well said.
So that's good. Yeah.
Okay. But overall, an improvement, right? Many of those used to be 50% and it went up to 100%. So that's a good thing for business owners, more deductible business.
Yeah. If it inspires you to help out your local restaurant, then absolutely. Yeah. That's the purpose of it for sure.
Good.
Other items that we're seeing, we're a virtual remote company. And we've seen a lot of other accounting, a lot of other office type environments just kind of go away from the office. So building that culture, a lot of people are starting to do more retreat style events. How do we deduct meals for that? I think there's still a lot of opportunity for companies and businesses to deduct meals and entertainment expenses for these retreats. We have to build a culture somehow. So, for instance, our company is going to Vegas for our all company retreat. All employees are invited. So I think we're starting to cross or hop over that hurdle of our first thing to cover. Hey, it's business related. We have all of our employees here. We have an agenda. We are trying to solve problems for our business during our sessions. So I think there's plenty of opportunities for us to deduct the food that will be at this retreat.
Yep.
But one thing I was thinking of was, okay, so what if we're in this conference room in Vegas and our first meal is like a lunch, like a working lunch. So we got some wraps in another room. Well, I would actually say, because it's a full retreat and it's for our convenience to keep working, that would qualify as a business meal. But things that I'm going to be looking at as the tax professional was it purchased from the restaurant? Or is it just the catered in from this company? Is this a retail type environment? No, Summit had to reserve the room, and I'm sure this meal was only catered by this company and things of that nature. So that will be a consideration that we have to look at to see if it would be a restaurant meal.
Okay, so not yet decided whether we think that's 50% or 100%. Is that right? You're looking to say, did it come from the example, the downstairs restaurant? It's on their menu. They just delivered it. Sounds like it might be 100% versus, no, it's a totally separate kind of kitchen that just caters to events and they'll just bring in your food. But retail customers couldn't purchase that kind of food on property.
That's right.
Okay.
Yeah. And then looking at another angle, though, to get 100% deductibility, and that is like holiday parties for companies are deductible. So I would start shifting towards that angle to say, well, wait a second, everyone's invited to this event. So regardless if it's a restaurant or not, I might say I still want to deduct it all because I think it's qualifying under like this team building exercise where everyone's invited. So, of course, tax law, it depends. But as you can see, there's so many angles to look at to get full deduction on these things.
Sure. Yeah, I can see the logic for here. And so when we're there in Vegas, some of the meals will actually be at restaurants. That sounds like an easy one, right? That could be an evening activity. Something like a cocktail party where we've got a separate room and they're serving
Mm-hmm.
is that true?
I would say yes, as long as the company focuses on making it a business purpose, and in making sure business is discussed and documenting as such, then yes, I think that we have a great opportunity for full deductions for these.
Okay. Mm-hmm. And then there could be an entertainment portion, right? There are shows in Vegas, and you could do a team event where everyone goes to a show.
Mm-hmm.
Tickets and things for that. Will we touch on kind of how the entertainment rules are?
Yeah. So again, it's kind of related to if it's entertainment related to the full team. Mm-hmm. So like if I had a holiday party, invited a magician, I would certainly think that would be fully deductible. Mm-hmm. But if we're going to a magic show, right? We have to buy tickets. Again, we'll have to really determine how we link to the business purpose of this and link it into the full event. But that's the popular example. If I take a client to a baseball game or a show, the entertainment is now not deductible under some of those auspices of if it's just like a sales type call. Mm-hmm. So if I go to the football game, I can't deduct the tickets. But if I have a separate receipt for the hot dog and the pop and the pretzel, that does count for a meals deduction. Mm-hmm. So again, we're going to be very careful on how we document where we're going, how we're discussing it, and how does it fall under the full agenda of the retreat.
Sure. Since you mentioned the baseball game, Dave, I've had a client say, so if I have baseball tickets and I want to give a tickets to an employee as recognition, how should I treat that?
So it's more of like a gift.
Right. You're doing great. Have to, take you and your partner to a game. The tickets are let's say $100 a piece. So I've given you $200 tickets. Is there a tax?
Yeah, I would say you're starting to get to a level that's above a de minimis gift of some sort. So I would say that would be compensatory, a compensatory event. Okay. It's not, they aren't going for business reasons at that point. It's just the employee and the partner. So I would say, there isn't that other party there that would make it business related. So I would think that would, the company would get the deduction, but really it's just because it had to be included in compensation for the employee.
And so for some owners, when I've told them that, they say, okay, then I won't worry, right? I'd rather not cause you a tax impact. Because you could say, well, then you could also gross up and, you could give Dave a $60 bonus and then say, here are these tickets. And usually that kind of size, they're like, I'm just not going to mess with it. I'll give them the tickets. I just won't deduct it and not turn it into a bit of a tax headache.
Yeah, it's an administrative lift for the team. Can you gross this up in the payroll system? What?
Right. Like for this amount, no.
Give me a break.
Right.
Yeah, give me a break for sure. Mm-hmm.
I agree.
Mm-hmm. Yeah. So I think the last thing that I would look at is I'm starting to get a lot more questions on per diem rates. And I want to cover that real quick. So per diem is an amount that can be provided to an employee for business travel. And there's no burden on the employee to keep providing receipts. They just need to prove that they were on a business trip if it comes down to it. So depending on where they're going, the per diem rate changes. Mm-hmm. But the company may want to start shying away from per diems for that because per diems are still only 50% deductible. So I would encourage the company to look at, let's do a direct expense reimbursement. So if the employee was on a business meal at a restaurant, I can still get the 100% deduction. Mm-hmm. If I have the restaurant receipt, the business purpose, and things of that. And if I just had the per diem rate, then I can only do the 50% deduction. So just measure how much meals are out there for your clients. Mm-hmm. If it's a small amount, they still might like the per diem just so they don't have to do the whole receipt game and that documentation. But if it is a significant part of your company's P&L, then you might want to explore saying, let's just go back to getting actual receipts, and we might be able to get some higher levels of deductions there.
Yeah, that's good to know. As you know, I have one client that does construction projects.
Mm-hmm.
So when they do these, they'll send a team of 4 or 5 people out for 6 or 8 weeks.
Yeah.
So that 50% could be a fair amount. And I know they like, for the employee, it's easier to say, I will give you just $25 a day or $50 a day.
Mm-hmm.
And then you don't have to capture receipts. But it could be that that's saying, okay, so for these trips, in a year, that's a few $1,000s worth of tax deduction that you're losing. Why don't we just go ahead and get the receipts to do that? So that'll be good to look at. I think of other companies where it may be occasional salespeople travel, but a few days a year where you're probably looking and saying it's probably in the tens or maybe hundreds of dollars, maybe not worth really looking closely at.
Yeah, just little items of discussion, right?
Mm-hmm.
And we can look at this podcast a couple of ways, right? We can look at it from the tax professional and the client service angle, where we can bring these type of options to our clients. And if you're listening for tax savings, there's also the opportunity to say, okay, we can change our internal processes for sure to save a little bit more or deduct more. But that's so as a virtual CFO firm, that's kind of what we do for our clients, is looking at these opportunities and discussing that.
Yeah.
And I'm going to turn it to you, Tom. I'm going to turn into the host now.
Okay.
So, but if this is a CPA listening, for sure, can you tell them a little bit about our training program, CFO course?
Yes. Yeah, I will. So we have the virtual CFO Playbook that we teach.
Mm-hmm.
So if you have people, and many of the people who have taken this are tax professionals who want to change their business some and say, I want to offer more advisory kinds of services. So this playbook actually has 15 modules to walk someone through how Summit does that. And as you had said, we are primarily a virtual CFO service firm. We do taxes, we do a great job of it, but we don't go out trying to just get people's tax returns. That's what we're doing in that. So someone who wanted to change their business has what we think are all the tools to do that. As people take it, then there's ongoing support, like they can do a coaching session with one of our founders, Adam, and with me. We also have a weekly call that's actually on Tuesdays to go through a 1 hour. Different CPAs get together and talk about the progress and questions to do it. So someone who wanted to dive deeper, that's a really good option. And they can find out more information at the Summit CPA Group website.
Yeah, summitcpa.net.
Yes, thank you.
And search for the virtual CFO Playbook. And so, and that's how a lot of CPAs start off. Taxes are really kind of a low hanging fruit from a consultation perspective. However, I think a lot of people's tax clients who are listening on this call or on this podcast might want to get into more of a recurring revenue model.
Right.
And we certainly feel like our playbook's a great way to get into that. So check it out. Tom's on a lot of those calls. So if you like Tom, there's certainly a lot more podcasts and a lot more course content that you can get more of Tom.
And if you don't, there's other people on the call too that you listen to.
Yeah, that's right.
This is really helpful. And I think you're demonstrating what I hope people are wanting to get from this is knowing the tax law is important, but being able to explain it to people who are not tax professionals, who want to give examples and kind of help people understand where some of those boundaries are, I think are really valuable. And so what I can do is kind of tell clients, hey, things have changed a little bit, and here's a couple things you should consider. And from this, say, here are the guidelines that you get into. As people, you can feel they're starting to push the boundaries. I think it's good to say, remember the intent of what you're doing. You're getting right to that edge where someone could disagree with doing that, but you've got a decent benefit even just working within the business purpose guides.
And then we're a CPA firm, and we still have to look at this stuff, as we were talking about with our retreats.
Yes.
How does our retreat fit within the tax law? And we'll have to deliberate internally to see how we want to treat some of these items. So it's not easy. But
you're right. Even a tax firm, right, that says I'm going to put tons of food in the office during busy season and then maybe buy food, right? Those could be, sounds like from what you're saying, those are treated differently. If bringing food in the office to have it there is chips and drinks and things that you wouldn't say is typical restaurant food, that's treated differently than buying dinner to be delivered at 7:00 because everyone's working late. So good to keep track of.
In the snack room, start thinking about where you're getting your snacks from, right? If you buy it from the grocery store, 50%. But if you start getting some food from a restaurant, bringing it in each day for people to eat in the break room, hey, now we're at 100% because it's from the restaurant. So just think about where you're buying your food from. Yeah. And it's 9:32, so it's getting closer to my lunchtime.
Yes. You got me thinking now employees are gaining weight because the firm is buying really good food that we're going to eat more of.
Yeah, that's right. Good. Well, Tom, this was our inaugural podcast of the Clear Diagnostics podcast. We are going to spread the news and get people to recognize why it's called this way. And that's excellent.
That's great. I look forward to doing more of these, and we can only go up from here, right? It's got to go up from here. People remember podcast 1.
That's right. All right, Tom. Thanks a lot. And
thanks, Dave. Yep. Bye. Talk to you soon.
Enjoy this podcast? Visit our website at summitcpa.net to get more tips and strategies for achieving tax success. We're here to be a resource for you.